Welcome back to another big week in crypto, the market that never sleeps. This week we had banking giant Citigroup joining the banking elites of JPmorgan and Goldman Sachs, hoping to take their share in the futures market. Etoro is seeing a 23 times increase in revenue generated from crypto trading. And can anyone stop this man? Michael Saylor buys even more Bitcoin, now owning over $5 billion worth and counting. As always, lots of great stuff to cover. So in this video, we'll be looking at the price action for the week, my 3 top charts of the week, and then we'll finish with the biggest news stories of the week. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, crypto did have a great start to the week, shooting up almost 14%. However, it has since corrected and has finished the week pretty flat. There is something, however, very interesting in the price chart this week. Check it out. Starting with the previous week, and here we have the Bitcoin price in blue as a proxy of the crypto market, as when Bitcoin crashes, the whole market crashes. When Bitcoin rallies, the whole market rallies. In red, we have the 200-day simple moving average, SMA. And in green, we have the 50-day SMA. And most recently, it had broken above the 200-day. We had a brief spell below before rallying back up. And now we have another week of data. So as mentioned, we did rally up 14% this week before coming back down and pretty much finishing the week pretty flat. The key thing is that it has stayed above this 200-day moving average, and the 50-day is coming up to meet it as we speak. But what was really interesting for me this week is that I overlaid the Wyckoff accumulation pattern. And what is the Wyckoff? It was done by a very famous trader, Richard Wyckoff, and it explains how the institutions were able to manipulate the market to take money from the retail investors. And it is eerily similar to what we just experienced. So we'll notice we had this crash here, which measures up with this jagged crash here to the selling climax. We have this automatic rally. We had the selling climax and the automatic rally here, which sets the trading lines. There's your support and there is the resistance. You have these up and down patterns where the institutions are trying to scare the retail money into selling. In phase C, we have this spring event here where people think it's going to crash down before it begins moving back up, which is really correlated here, before moving into these signals of strength above the resistance lines before we break out into the next leg. And you have to admit, this is eerily similar. So Bitcoin remains above the 200-day SMA, which is a very positive sign, and the 50-day SMA continues to charge up, preparing for a golden cross scenario. What was really interesting is when you line up the Wyckoff accumulation pattern, and you have to admit it does match up pretty perfectly. Pretty spooky stuff. And this indicates what we all experienced over the last 3 months was an accumulation phase led by institutional money, and that a breakout, as long as there's no black swan events, could be coming very soon. Okay, next up we have my 3 charts of the week. Check it out. First up, we have an excellent chart by Plan B. And what are we looking at? Well, this is Bitcoin's price, and you can see the entire market all the way back to 2013. In the light blue, this is the S&P 500, representing the American stock market. And in orange, we have the gold price. And I think what this chart really shows is the difference between volatility and risk, as people are always saying that the crypto market is extremely risky. However, there's a big difference between risk and volatility. Yes, the crypto market is extremely volatile, I agree. But which one would you rather own? The one that has gone up thousands of percent, even though it was volatile, or something like gold, which in the last 10 years has been pretty much flat? And for me, what was risky was not owning crypto. Chart 2 shows some interesting events to the Bitcoin Lightning Network. And you can see very recently it's beginning to explode. And if you've actually seen Satoshi Nakamoto's original white paper, Bitcoin was meant to be a digital cash system, not digital gold. And so as this Lightning Network expands, people will be able to send tiny amounts of Bitcoin instantly for virtually free, fulfilling Satoshi's vision. And finally, again, we have to mention NFTs because they are just exploding. And this chart made it last week because it had just gone above the $1 billion mark, which was huge for the entire history of NFTs. Well, in just this last week, it's now passed over $2 billion. And everything is exploding. You have CryptoPunks going exponential average selling price. We have the Bored Apes again blowing off into exponential territory. So is this a new paradigm, or is NFTs becoming the next bubble? So we always need to make sure that we understand the difference between volatility and risk. Yes, crypto is volatile, but it has vastly outperformed stocks and gold. And so not owning crypto was the one that was incredibly risky. The Bitcoin Lightning Network is beginning to explode, and I think this would make Satoshi Nakamoto very happy, as back in 2008, when the Bitcoin white paper was first introduced, Bitcoin was designed to be a peer-to-peer cash system and not digital gold. And NFTs have been exploding, breaking through the $2 billion mark, when just last week I had reported that it had broken through the $1 billion. Okay, to finish up, we have the biggest news stories of the week. First up, Binance enforces mandatory KYC on all users amid mounting regulatory pressure. So KYC is Know Your Customer, and it's when you have to submit personal details to the company. And this stops things like fraud and anti-money laundering. And Binance is always in the news. Good news for the UK, as Binance quietly resumes Great British Pound withdrawals, as it seems to have fixed its issues with UK regulators. And just to put things in perspective, guys, you know Coinbase? And Coinbase's profit in the first quarter was about 800 million. And so its current market value is 54 billion. Well, Binance's profit is about 4 times that of Coinbase. So this would give it a valuation of $200 billion. This is the size of Binance. Bitcoin partnership unlocks BTC and Ethereum payments for 85,000 merchants. So here we have a partnership between Bitcoin Swiss and Worldline, and basically any Swiss businesses using Worldline's point of sale or e-commerce payment services can now offer clients the option to pay with Bitcoin and Ether. And this is going to be available in 85,000 different businesses. Bullish. We saw Coinbase to invest $500 million in crypto, and it's going to start investing 10% of all its profits into cryptos. And it will be very interesting to see which cryptos that Coinbase decide to invest in. Visa buys an NFT token, a CryptoPunk, for $150,000. So what exactly did Visa buy? Well, it was CryptoPunk number 7610. Yep, this pixelated JPEG went for $150,000. So why did Visa do this? Well, having worked in marketing for financial services companies, my guess would be publicity. You see, to take out a full-page ad in a national newspaper, you would be paying $50,000 to $100,000. Or you could just buy one of these hot NFTs and you can get publicity in all of the national newspapers at once. And also show that your company is young and down with the kids. And don't forget, recently we also had Marvel launching its first NFT digital comic collection. NFTs are on fire. Banking behemoth Morgan Stanley quietly grabs more Bitcoin. And basically, Morgan Stanley did acquire about 30,000 shares of the Grayscale Bitcoin Trust back in June. However, just this week, they've quietly amassed 930,000 more shares of the Grayscale Bitcoin Trust. And this comes to just under $30 million. So the megabanks are upping their investment into Bitcoin. And can anyone stop this man from buying more Bitcoin? MicroStrategy buys even more Bitcoin. And so on Tuesday, MicroStrategy upped its Bitcoin holdings by almost 4,000 Bitcoin. They paid on average around $45,000 per coin. And this means they've got over 100,000 Bitcoin, which they've paid just under $3 billion. And it's now valued at over $5 billion. So it won't be long before Michael Saylor will have doubled his investment. USDC to be backed 100% by cash. And the story here is that stablecoin issuers are beginning to panic, as the company revealed just last month that only 61% were backed by actual cash, and they've now quickly upped this to 100%. And I think they're panicking as they're anticipating regulatory changes. Eurex to launch Bitcoin ETN futures to meet significant demand. And an ETN is similar to an exchange-traded fund, but this is an exchange-traded note. So a bit more closely related to how bonds work, but the good news is that they're also backed by physical delivery of Bitcoin, so it will affect the price. And this move will establish the first regulated market in Bitcoin-related derivatives in Europe. The Bitcoin ETN is backed and redeemable in Bitcoin. And again, this all comes from significant demand from institutional investors. And finally, banking giant Citigroup filed to trade Bitcoin futures. And this megabank joins the ranks of Goldman Sachs to become the second major bank to offer Bitcoin futures trading. So Citigroup also want their slice of the profit pie. And again, this comes from their clients are increasingly interested in this space. Bullish. So here is your summary for the week. Bitcoin holds above the 200-day SMA and seems to have a one-to-one correlation with the Wyckoff accumulation pattern. The Bitcoin Lightning Network is expanding at a terrific pace, fulfilling Satoshi's vision of an electronic cash system. NFTs are exploding, selling more this month than in all months combined, helped by Visa. The world's largest exchange, Binance, is stepping up its regulatory game, forcing KYC on all its customers. Can anyone stop Michael Saylor from buying more Bitcoin? I don't think so, as he now owns over $5 billion worth and is close to doubling his investment. Stablecoin issuers are panicking and beginning to up their cash reserves, anticipating regulation. And banking giant Citigroup joins the other megabanks trying to take their slice of profit from the Bitcoin futures market. So there you are, guys. Hope you enjoyed. Never a dull week in crypto. Just to say then, if you did enjoy anything in the video, then don't be shy. Drop a like, and a big thank you to everyone who does. If you haven't yet subscribed to the channel, then click below and join us. I've got some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.